So there are a lot of things leading to this market and its volatility. We're starting to see some downward pressure as of lately, and I think one of the keys to this volatility is oil. So we're going to dive into that a little bit today. So my name is Brian Cannon, and welcome to Markets in Five. All right, before we jump into oil, let's talk about the stock market. So the last Markets in Five, I put a little drawing down there of what I thought might or could happen based on the trends, and it looks like it is playing out the way that I kind of drew it. In the fact that the two green arrows up there served as levels of resistance, and sure enough, it couldn't break above that 200-day moving average. So it's then pulled back down. So now the red arrows here are levels of various levels of support that we feel like the market could find and hold up on. So obviously, if it holds the first, that would be the best case scenario, and if it comes down and holds the third, that would be kind of not the worst case scenario, but that would be the best of the worst case scenarios. And if it can't hold that line there, then lights out. We haven't seen the bottom on this market. So those are the things that we're watching, and as we've already pulled a little bit of risk back off the portfolios, and we'll continue to do so. But it's at one of these levels, more than likely we'll end up putting it back on, assuming that it will hold. So, but we'll make that call when the time comes. All right, the price of oil has a very great impact on the stock market, right? So West Texas Light Crude is the type of gasoline that goes into the cars, into the trucks, into the ships, and essentially, when the cost goes up dramatically, it costs more to ship goods and services, and so it adds to inflation, and ultimately it detracts from the stock market. So the price of crude and the price of the stock market, they're not negatively correlated, but they can be at times. And this year is a good example of when they were negatively correlated. So you've got essentially a stock market that is done terrible this year, and then you've got the best sector in the stock market is energy, and it's done tremendous this year. So it's bounced around here a little bit lately, but you can see that since basically 2022, the beginning here, it had a tremendous rise, as the stock market had a tremendous fall. So it's bounced around here, kind of been in this big trading range as of late. It's broken down, what was support, then becomes resistance. So here we are right now. We're right at that resistance zone. So the question is it going to break to the upside and continue its run up, or is it going to break down? Well, we're getting a positive divergence here, meaning that there's some momentum to the upside in the RSI reading. And we're also seeing the MACD start to take off a little bit, and the histogram there is heading upwards. So that kind of tells me that that it looks like it's going to break it to the upside. So we'll have to see, but that's what I'm seeing right now. So when we look at light crude relative to the S&P 500, you can see that again this relative performance. So it dramatically outperformed all the way through. Essentially, June, so basically all year. So for 6 months, oil has tremendously outperformed the S&P 500. Now you've seen outperformance from the S&P 500 relative to the price of oil until right about now. We've got a relative RSI is heading upwards. You've got the relative MACD heading up, and then you have a breakout right here. So, is it a fake break? Not sure, but that's something we're watching. But obviously, if the cost of oil continues to rise, it's going to have an impact on consumer sentiment, on consumer spending, and certainly going to have an impact on cost of goods and services, inflation. So all of that will have an impact on the stock market. So we've got to watch our levels and just make sure that we're protecting on the downside in case this, we haven't seen the bottom yet. So as you can see, the price of oil is very impactful to inflation, to the cost of goods and services, and ultimately to the stock market. So if we see oil continuing to head up, I think you're going to have more volatility and pressure on the downside for the market. So That's something we're monitoring closely, but if you have any questions, just give us a shout here. My name is Brian Cannon, and we'll see you in the next Markets in 5.